Hello, investors and traders, and welcome to the weekly market report with Market Guys. I'm AJ Monty. Well, once again, we had a great result with regard to our forecast from last week's market report. And as I do each and every week, I like to go over the market so you can see how effective technical analysis is, especially candle charts, when you're trying to predict the market. It's one of the best tools, if not the best tool, that you can use for gauging price direction and change in that direction. I'd like to start off by looking at the power shares, ticker symbol QQQ. This represents the NASDAQ market, and as you can see, looking at my lines from last week, I said that we would most likely go lower. And for those who have been following along with the Market Guy report, you'll know that the end of my diagonal lines are the price targets. And last week I said we would move lower to fill this gap right here. And this horizontal line is the gap fill target price that I put in place. And look at that. Yesterday, right there on the 3rd of May, we hit that to the penny. And then today on the 4th, which is Friday when I record this, you see that we bounced off of that support level. So what does that mean for next week? Well, let me erase all my lines right here and show you one particular candle that really stands out, and that's the candle from today's price action. This is a very long candle with a very small shadow under the candle, which tells us the sellers did not have much success pushing the price any lower. So another way to look at this is that the buyers are in force. And if you look back in history, you'll see that every time we've had these long green candles, the price that followed was usually in an upward direction. Back here, and even back here when we were looking early March, you see that long green candle as it moves over the 20-period moving average. So my expectation for next week is that we will most likely move up in this direction right here in an attempt to fill this gap. Now I'm going to draw a horizontal line from this gap fill point because that's going to be our resistance point. And we have to keep an eye on that because there's a good chance that once this gap fills, the price will reverse and start to move lower. And that's how we treat gaps. You have to understand the 80-20 rule and how that works into gap trading strategies. I'll give you a link right at the end of this report so you know exactly how to learn about gap trading strategies. But that's my forecast for next week. I think we're going to move up. This is actually a 2-week forecast that I'm going to leave in place. You can see that the end of this line is pretty much the middle of May. So I think it could take a couple of weeks before we move up to fill that gap, and I'll leave that in place so that we could track the success of that forecast in a couple of weeks. Now, next, I'm going to look at a more broad-based index, which is the Russell 2000. That's ticker symbol RUT. And you can see, last week I said we would move up just a little bit. We did that, and on Wednesday, again, this isn't a magic trick. This is actual numbers and what's happened. On Wednesday, we hit my pivot point right there to the penny, and then we pulled back with the end of this line right here, just like the other lines that I've drawn, the end of the line being my target. So we had a pretty interesting volatile week this week. So we hit that high, pulled back, came back, hit the lows. And what does that mean for next week? Again, because of this green candle, I'm going to just extend this up and out right up to this line right here, which is going to be our resistance point right there. You can see that, and I pointed this out a couple of weeks ago, we see successively lower highs. So I do think we're going to move up to test that. I don't think we're going to break out. I think eventually we're going to pull back, but I'm going to leave that in place for next week's forecast so you can follow along with the market guys to see how accurate the charts are, like I said before. Now, if we go to the diamonds, ticker symbol DIA, that's the Dow Jones Industrial Average ETF. Left my lines on the chart once again. I said we're going to open up the week lower and go lower with the end of that line being my target. We hit that with ease. Now, what does that mean? Just like the other markets, we see a long green candle But the high for today was right at that 20-period moving average, right there around 243. I do believe that we are going to move higher in the Dow next week and test this gap fill resistance right here. I'm just going to extend this out a little bit. I think that will hold as resistance, and we'll have to wait and see whether or not it does hold. But I think that the Dow, just like the Russell 2000 and the Qs, are going to go higher, and then we'll have to wait to see if there's a pullback in the market from that point. I don't want to jump ahead too far, but I do think that next week, I think the buyers are going to take control and move the prices a little bit higher. Now, finally, if we look at the spiders, SPY, you'll see that the same thing had occurred. I said that we would most likely move up a little bit, pull back with the end of the line being my target. We hit that target with ease. The green candle today is bringing us to a close over the 20-period moving average. I'm going to clean this chart up just a little bit and erase my previous forecast lines for you. I think that the S&P is going to move higher in an attempt to test this resistance point right there. And again, we'll have to wait and see whether or not we break through that resistance. I think the resistance will hold and will pull back. Why? Because again, like the rest of the markets, we're seeing successively lower highs. The lows are holding, so that tells us the buyers are holding strong, but the sellers are becoming more motivated, and that's why I think that high will hold as resistance. You know, last week I talked about the VIX, that's the volatility index, being a very good, if not the best, leading indicator that we have. And I said that the VIX would most likely go higher. We came within $1 of my target price right here. The end of that line was my target for the VIX. And then we immediately snapped back and started to move lower. And you can see right here, although this is a very long shadow under that candle, the body of this candle is showing a bearish engulfing pattern. So I think that the VIX is going to move lower to test this support level right here. And what does that mean? Well, remember, the VIX, the volatility index, is inversely related to the S&P. We already said how we thought the S&P is going to rally next week to test resistance. Well, that means the VIX will most likely drop to test support. And that's how we use that as a leading indicator. We keep that on our watch list, we watch it, and we use it to gauge the momentum and the excitement level and the volatility of the general markets. And that all plays into the equation of how we read the technical charts. Now, if you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. Many of you who follow us already know about our video library. Just click on that tab right there. It says videos, and you can scroll down and you'll see the many different videos. These are very, very short videos, 7 to maybe 8 minutes long. And I like to bring your attention to this one right here, which says Trading the Gap. I mentioned gaps throughout today's presentation, and I'd like to have you go there just to review what gap trading is all about so you could understand the 80-20 rule and how to apply that to our technical analysis of the candle charts. So I'd like to thank you for joining The Market Guys. Stick with us each and every week, and we look forward to speaking with you next Friday. Have a good one. Bye-bye.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.